All right, guys, we are back for another lunchtime Zoom call, and I'm very excited about having you all here for this one. I think this is going to be very impactful, and it's going to help a lot of you in your businesses if you haven't taken advantage of the SBA programs that are available right now to you. If you're here in Zoom, don't forget that you can type your questions in chat, and we will get to them when we can, when it makes sense with the meeting. We do have a pre-scheduled presentation today for you. We're going to start out with the PPP and going to finish with the EIDL programs. Do remember that these are two separate programs. I know a lot of people kind of get those kind of mixed up back and forth, so we are going to try to do those. If you can try to address your questions during those different segments, that would be great. If not, we can always circle around back to you. If you're watching on Facebook, definitely give us a like, and remember that I can get your questions answered if you just comment on there. Definitely leave us a comment anyway. Let me know what you're doing today and say hi to Jennifer and Michael. But we're going to start out and introduce our two speakers today. Jennifer, she's been a great CPA, been helping a lot of you all out in the group. And Jennifer, for those that might be watching or watch this replay that do not know anything about you, go ahead and let them know.
Yeah, I'm the owner of Time Bookkeeping, where we help investors and service-based businesses really maximize their profitability. We help them streamline other revenue options, I guess you would say. We take care of their bookkeeping, tax filings. Essentially, we can help you with anything accounting that you have going on, any questions that you have. I know a big thing that's coming up recently, Jim, is everybody's getting IRS random notices that they owe a random amount of number to the IRS. So that's something we're helping business owners sort through right now of why they're getting those notices. So essentially anything accounting that they need help with, we're here to help them.
Awesome. And I also have here someone I know that's been very excited and been emailing me back and forth for like a month, Mr. Michael Ashcraft, straight from the SBA. How are you doing today, Michael?
I'm doing great. Thank you. Appreciate the invitation to talk today to your group. Frankly, there's so much happening right now with these recovery loans to get through the pandemic, and we've got a lot to cover. And literally, I've never seen more changes happening than right now. And we've been doing this, we're approaching 12 months right now of these programs, and there's more changes and more coming online now than ever before. So I think it'll be great news for folks if you haven't either kept up with these programs or used any of these programs. There's plenty of time for you to get in the queue and get some funding for your business.
Yeah, absolutely. We got a great presentation for you today, and I do have that pulled up here. And I know that Chris has already asked a question there in Zoom, and I'm going to get to that one when we reach the EIDL portion. I know some of you have submitted a couple of questions already as well. But if you want to jump right into it, Michael, if I can get this shared over here. Can everybody see that over there?
Great.
Okay.
Yeah. So I'm going to go ahead. I've got two big screens, one on each side, my laptop right in the middle. I'm going to drop that down so I'll be blacked out on the screen. But there we go. So let me get started by saying there's just a lot happening, as I mentioned earlier. In the last few slides of this presentation, we're going to just talk about some of these new programs coming online, both loan programs and grant programs. So if you go to the next slide, please. So this is just a quick overview of what's happening, and basically this is the legalese to keep the attorneys happy, saying things are happening so quickly and updates so fast that there could be something actually on this slide by the end of today, perhaps, that needs to be updated. So go to the website, sba.gov, for all the most up-to-date information. Next slide. This is the overview of what we're going to cover, the agenda, where we are, where we're going, all that sort of thing. So most of what I'll cover will be either the PPP, the Paycheck Protection Program, or the EIDL, the EIDL Economic Injury Disaster Loan Programs. Next slide. So, and as I talk about this, a couple of other things, even though Congress passed the law that went into effect on December 27th, there is another stimulus you may or may not have heard. It passed over the weekend through the House. The Senate is deliberating on it right now. So that will put another, at least, if it ends up being how we expect it, at least another $50 billion over and above all the hundreds of billions of dollars that are out there now for small businesses to tap into. Just to give you a concept of how big all of this is in terms of loans. SBA in Kentucky, I'm just talking about the state of Kentucky, through less than 11 months since the programs came online, has done between the PPP and the EIDL loan over almost $8.2 billion through mid-February, and over almost 146,000 loans to small businesses and nonprofits in Kentucky, much larger than that nationwide. To put that in perspective, that's 4.5 times the dollar amount we've done for the prior 10 years. 4.5 times the amount of money going into these programs for small businesses in 11 months versus what we did in a decade. And it's almost 20 times the number of loans. So that's how many businesses have tapped into the program. Again, those are just Kentucky numbers. So that just gives you an idea of the opportunity if you haven't tapped into it yet for your business. Next slide. So it's divided up into loan programs, grant programs, and right in the middle under EIDL, there is one that is a grant at the bottom, the Targeted EIDL Advance. If you hear the word advance, see the word advance, that's a grant. To the right side of that, that's a grant. To the left side of that, the PPP and the debt relief, those are loan programs. And I'll get into the specifics of them. But the Paycheck Protection Program, I want to emphasize that is technically a loan. However, you get up to 100% forgiveness on that loan if you follow the guidelines that we'll talk about, and lenders are responsible for keeping you on track with that as well. So you work with your lender and apply, and then you apply for forgiveness through your lender, and then SBA approves that at the end. And if you don't get 100% forgiven, then we'll talk about what that means for you on that program. So we can get into the next slide. I'll get some details going. So for the PPP, the Paycheck Protection Program, one thing that is huge now with the update that happened on December 27th of 2020, that bullet number 2, you used to have to choose between 8 weeks coverage and 24 weeks coverage for that loan. In other words, you had to spend the funds either 8 weeks, and then later on they allowed people to spend up to 24 weeks on the loan proceeds. Now you can choose anything in between. So if you feel like it's best for your business to spend it all in 12 weeks, 18 weeks, 24, 8.5, whatever the case may be, it's that flexible. That's a huge win for businesses. That's something they all, had said they wanted more flexibility there. And then also realize that most of these loans, these forgivable loans, are smaller amounts. If you go to the second to last bullet there, you will notice that it says for loans up to $150,000, which is out of those billions and billions of dollars that SBA has put out across the country to businesses and nonprofits who use these programs, almost 90% are under $150,000. So it's designed for the smaller businesses to be able to take advantage of the programs available, the recovery programs. Next slide. Oh, and by the way, I meant to say this at the beginning. If you're interested, I told Jim, more than welcome to get a copy of this PowerPoint. So, if you don't feel like you have to write notes down furiously. And there's contact information at the end, one of the last slides too, where you can follow up with me if you have some questions. But Jennifer's here to answer your questions right now as well. So take advantage of that opportunity. So the first draw, there's 2 versions. There's a first draw back in December of 2020. Congress allowed small businesses to be able to go into a second use of the PPP loan, they call that the second draw. So anyway, they expanded the number of different types of businesses and nonprofits that can use this program. They expanded what you can use it for in terms of your expenses, and I'll get into that in a few slides. And then, as I mentioned earlier, you have any time frame between 8 and 24 months, or 24 weeks rather, to use the funding that you get. And you do have to have been in business by February 15th of 2020. So if you basically were an active small business or a nonprofit that's eligible for this program, as long as you were active up and running as an entity by mid-February 2020, over a year ago, then you're eligible for it. And the second draw or the first draw PPP, the deadline on that as of now is the end of March 31st. There's talk in a new bill, that new stimulus bill, to maybe even extend it beyond that date. But if I were you, I'd count on it to be March 31st of 2020 to get your application into your lender. Okay, the next slide. So some of these changes, I mentioned different types of legal entities at the top. This is important for those, particularly destination marketing companies. Those are folks that are involved in tourism, like a tourism association, a Main Street association, et cetera. At the city, county, or state level, they were not eligible, as were chambers of commerce not eligible for the PPP in the first round. So they made that change in December. But if you're a sole proprietor, an LLC, a self-employed individual, or these other nonprofits that are listed at the bottom as examples of types of organizations that can tap into the program, and you are eligible for that. So basically, it covers almost every type of legal entity, including a lot of nonprofits that were not originally able to use the program. And the whole idea is to spend at least 60% of whatever the loan amount is on payroll to keep people on board, to keep people employed. So that was the idea when they launched it back in April of 2020. That is still the idea today, to keep people employed, including yourself as the owner operator of the company. Even if you're the sole employee of the company, you can use the proceeds of at least 60% of the loan amount to use for payroll and payroll related expenses. Okay, next slide. So that's basically the first draw PPP. The second draw means that anybody as of mid-January 2021 up through the end of March, you can go back for a second bite of the apple, so to speak. So you can get your documents together that you'll need, which is based on payroll, the average monthly payroll for 2019 or 2020, whichever one you choose to use. And then one thing else that they did as a change is they allow anybody who is in the accommodation and food service sectors, which basically that NAICS code, North American Industrial Classification System, and Jennifer knows about that. Basically, that's on your taxes. Usually you have at least a 2-3 digit, sometimes the full 6-digit NAICS code. If you're not sure, it's easy to look that up. So if you're not positive, if you're eligible to get 3.5 times your monthly average payroll instead of 2.5 times that for your maximum loan amount, then you can easily check on that. And if you're not sure, just email me. Ask somebody like Jennifer who would know, or you can even just do a search on the internet for what that means. But it's a very, very simple process to find out which industry classification you're in. So on the second draw, just like on the first draw, you get the funding by applying to a PPP lender, and there are hundreds of PPP lenders just in Kentucky, banks, credit unions, even third-party nonprofits, or what's called CDFIs, community development financial institutions, that do these loans. Hundreds just in our state, thousands across the country, including some online lenders that don't even have a brick and mortar presence. So you'll not have trouble finding someone, but what I recommend is start with who you have a relationship with. Hopefully you've got a business banking relationship. If not, even a personal banking relationship. You can talk to somebody, ask if they're, as a lender, if their organization does PPP loans. And then if not, there are options to be able to find somebody very quickly. And I've got a slide in a moment that shows you how. And then you go back and you request forgiveness. You take that back to the lender, you provide them some documentation, and there's a form right there, that last bullet, 2483 form, and it's SD stands for second draw. That's the distinguishing factor between your first draw and your second draw. Simple applications for forgiveness. And in fact, they've got a brand new one on the SBA website. It's just a one-page, form to fill out. So that application for forgiveness is crucial. You need to do that in order to turn that from a loan into a forgivable loan, 100% perhaps in your case. Next slide. Can you go back one there? Oh, wait a minute. Maybe I got. Okay. Is there one with the graphic about the PPP loan forgiveness? Oh, I beg your pardon, Jim. You were right. If you advance backwards one, or sorry, go back one.
Okay.
So in addition to the second draw application, you have to have obviously the first draw in order to get the second draw, the second tap of that funding. And you need to use up all the funding from your first draw, your first PPP loan, before the money is deposited into your account for the second draw. There's a bullet point about number of employees. And the only other thing they're saying is, which for most people is not an issue, between 2019 and 2020, your revenue for at least 1 quarter of that year, at least 1 quarter, not the entire year, but 1 quarter where it has dropped 25% or more. And for many people, they said that's obvious. If I only have to come up with 1 quarter, the second quarter of 2020 versus 2019, that's when the pandemic hit full force in many states, many governments shut down or partially shut down business activities. So for most, that's the obvious one to pick. But in some cases, I've talked to people who have said it was a different quarter. As long as you got, a 3-month period where it has gone down on a quarterly basis, year over year, by 25% or more, then you're eligible. Okay, so next slide, we'll get into kind of how to find the lenders. If you do not have one, or for whatever reason you don't want to go back to the lender you used before, SBA.gov has something called Lender Match. You just type in a little bit of information and you've got a bunch of lenders that are going to be seeing that and can respond to you and say, sure, we'd love to do your loan. Or if you go to SBA.gov, PPP or Paycheck Protection, and then you that second bullet there shows you just look for find, and that's find lenders, etc. Or the third option is Ask SBA. We've got what we call local resource partners. Resource partners that provide free, confidential, no virtual, you don't have to have a face-to-face meeting. So virtual meetings where they can guide you through that process and maybe even give you a list of a number of different lenders who are active in your area on PPP loans. They know who they are because they work directly with businesses. Again, they work all day, every day at providing counseling services at no charge to you. Those are folks that are called the Small Business Development Centers, or SBDCs for short, SCORE, the Women's Business Centers, and then the Veteran Business Outreach Centers. All 4 of them provide this no-fee counseling, and they can help you not only just finding lenders, but also even sometimes answer some of your basic questions that you have about the application itself or just business questions in general. So then you fill out the appropriate application from the SBA website. I will caution you, some of the bigger lenders in particular have their own version of the application form. So before you fill out the form, talk to your lender and ask, do you have your own version of that? Sometimes they ask for a little bit more than what SBA does. So if that's the case, ask them before you start filling anything out. That way, if they want you to use their form, then you won't have wasted any time, filling out something and then having to go complete a new form. And then the actual process, the lender sends the application to SBA, they approve the dollar amount, and then the lender will deposit that money in your account. So one of the things they're going to ask is what's your, your bank number, your routing number, et cetera, so that they get that money deposited in the correct account. So as long as you get all that done before March 31st of 2021, and I got in parentheses, or if we run out of funding, which does not look like that's going to be the case, then you're eligible to get the loan proceeds. Okay, next slide. So if it is not 100% forgiven, then here are the details rather. Whatever is not forgiven, it will revert to a 1% simple interest rate on that. And then notice those next few bullet points, there are no fees, no collateral, no personal guarantee required by you. And basically the loan turns into a 5-year term on it. You've got 60 months to pay off that loan. If you want to, you can pay it off early. And the borrower, or I'm sorry, the lender will let you know what that dollar amount is once they hear back between themselves and SBA. And then once you hear back from the lender, then you will set up, a time frame to start paying back that loan. But again, it's usually a 5-year time frame, and that is only if it's not 100% forgivable loan for you. So that's why it's important to ensure that you are using at least 60% of the proceeds of the loan on payroll, and then the rest for other types of typical expenses that are allowable. And let me give you a couple of examples of, this isn't all inclusive, but some of those expenses in addition to payroll or payroll related costs, that you could use it also on things like rent, mortgage interest, utilities, new additional allowable expenses as of December 2020, including operational expenses, property damage due to civil unrest, supplier costs, and this is a biggie, worker protection expenditures. As examples, PPP, personal protective equipment, masks, gloves, sanitizers, and things of that nature. Okay, next slide. So also they ensured in December that everything aligns. There was a bit of a tussle between the IRS and the SBA and Treasury on what was allowable as business expenses. And Jennifer can attest to the fact that it caused a lot of confusion throughout the fall when SBA was under the impression and was correct in that Congress wanted these to be allowable expenses on your tax returns. But the IRS was saying, no, they won't be, and they got all that ironed out. So basically anything you use the funding for, as long as it is used for the expenses that's listed on the SBA website, it is also going to be something that's allowable as a deduction on your tax return. So that kind of sums it all up there for that slide. Okay, next slide. That's a list of 6, I think, very helpful links for your types of questions you might have. It gets into the application forms. There are some frequently asked questions, FAQs there that you can look at. They are searchable documents. Almost everything is either a PDF or a fillable PDF if it's a form. So you're able to easily apply. You're also able to easily find, if you've got questions on something in particular, some of the documents, the FAQs, sometimes they're 16, 18, 20 page long, full of all kinds of questions and answers. So you can just type in the terms appropriate to your question and probably find the answer to it very quickly that way. At this point, I guess it's time to slide into some questions, if anybody has any right now.
Yeah, we do have we got Charles there on Zoom. He says, how can we leverage PPP loans for real estate?
Charles, I don't think there's a way to do that. And here's why. The PPP is designed for basically for payroll, to keep people on, on payroll. And as I said several times, you can use up to 40% for other expenses. Now, if you're talking about somebody who's buying properties and making improvements to that, that's a whole other discussion. But this might not be the best loan program if I understand what you're saying, maybe in flipping properties or something, or acquiring properties for your business. There are other programs that might be a better fit. This one is specifically designed by Congress to keep people working, basically. So if you're interested in other types of programs, one of them is called a 504 SBA loan, 504. That's for land, building, and durable equipment. And they have terms of up to 25 years. They have very low interest rates, relatively speaking. And you can lock in the SBA portion of that loan, and that's a long discussion I can have with you later. But you can get that locked in for 20 or 25 years at current rates. So that usually for real estate works really well. That would be something, for instance, instead of renting space, you want to own the building you're in, or maybe you want to build a new building, or acquire a property and renovate it and use that to house your business. Those are examples of real estate specific loans that SBA has. But again, I may misunderstand, but I'm not sure the PPP is your best option for real estate.
Can I step in there, Michael?
Sure.
So in Kentucky, there's a special rule that some real estate can be held under a S Corp LLC. And under those circumstances, the owner must be put on the payroll. So if it's those types of situations to where you're already an S Corp and you're already on payroll yourself, that's a separate conversation than what was just had. So I just want to keep that in mind, that in Kentucky, there is a special rule that real estate investors can also have a separate managing company where they house different things, like they're paying contractors, they're accepting the rent, and then out of that they're paying the owner a salary. So I feel like that's a separate conversation for the PPP loan, rather than just having passive income. Because currently I have real estate, that's passive income. Of course I'm not an LLC, but other investors in Kentucky can have the two different business structures. So I just want to make sure we explain that.
Yeah, and I would like to expand on that too, Charles. I don't know exactly what part of real estate that you're talking about. I mean, I assume that it's like rental real estate. You're talking about acquiring properties and things like that. But if you're also a real estate agent, this is kind of targeted for you. You sold homes, you had a payroll that came in, you're no longer able to show those properties as well. If you're in the gig economy, say you're a contractor as well, or anything like that, you can still apply for the PPP. It's basically like Michael was saying, if you have payroll and you want to keep your business going and keep those people employed, or let's say that you have a large apartment complex and you got handymen that work for you and you want to keep them employed and they're like a direct employee for you, this is for you. But as for acquiring real estate, it's probably not going to be that particular focus for this program. And as Michael mentioned, there's other ones available. And you can also talk to Jennifer about her part as well that she mentioned. So there is a little bit of possibility, but the direct purpose of the program is to keep people employed. Got someone on Zoom also as well. If a realtor has an LLC, can we use Schedule C? I think that might be a Jennifer question there on that one.
Yeah, it depends on how they're, so if they're 1099, they absolutely can do a Schedule C tax filing and be eligible for it. Recently, I've seen some really funky ways that brokers are paying realtors. So that would be definitely something I would be willing to jump on a one-on-one call with them, see what their scenario is, and go from there with them.
Yeah, and what I always tell people, especially with these two programs, when in doubt, apply, because all it does is cost you your time and maybe looking up some numbers and stuff for your own business. So when in doubt,
Yeah.
apply. It doesn't cost you a fee or anything like that, just your time.
Yeah, and on average, Jim, I don't offer the application process with guys, but I pull all their numbers together, make sure that they're eligible on what I see on my end before I tell them to go do it. But it's a 30 to 45-minute process to get the application in. What is that if you're going to get $25,000? You're not going to pay taxes on it, and you're going to get to use those expenses that you use those funds for. It's a win-win in the business world right now. The new rules that were passed on it really makes it a no-brainer to apply for it. Even if you don't think that you're eligible for it. Recently, I've seen some things come back that I really, in my stomach, didn't feel like they were going to be approved, but they were. So, the one thing that I would be cautious about that, Jim, is I would highly suggest that people don't alter the data to make the application, because I'm sure Michael has the statistics a little better than I do, but they are cracking down on making sure, especially the PPP loan, that it's used for payroll and not something different. Don't go buy a sports car with the PPP loan. You're going to go to jail. So just don't do that.
Yeah, we definitely want to make sure we're doing it all legit. Lena on Facebook is the second one also eligible for forgiveness. And I assume that she's talking about the second draw of the PPP. Is it eligible for forgiveness?
Absolutely, it is eligible for forgiveness. One final point that, just for clarification, that came up talking about contractors and things of this nature. This loan, when we say keeping people employed, this is only eligible for your employees. So if you've got contractors, they need to file themselves. And if you're not sure about, what the difference is between an employee and a contract worker, Jennifer can have a conversation. The IRS has good information on their website between that. So if you're not sure, make certain that you do that before you take out a loan and find out it may not be eligible for forgiveness. Again, as contract workers, they can file their own PPP loan and use that just as you do as an owner of your business.
Right. I definitely glad you clarified that. General contractors for your business, like that you hire for third party things, fix your gutter, fix your roof, things like that, they will need to apply on their own. I was referring to if you owned a large apartment complex and you had direct handyman like on staff that are direct employees of that complex, then they would in a way be what you would be applying the PPP toward to keep those people employed, but they do need to be direct employees. It doesn't appear that we have any more specific PPP questions. And as a reminder, if you're watching on Facebook, definitely give us a like. And also, if you have any questions, that's okay. If we pass the PPP part of it, we can circle back around to you. But if you're all ready, we can go ahead and go on to the EIDL portion.
Sure.
Okay.
So the EIDL stands for Economic Injury Disaster Loan. I call it EIDL for short. It is part of the disaster loan program that SBA has had for decades. In fact, SBA, it's the only time when SBA does direct lending to individuals. So unlike the PPP and most other loan programs, what we call the traditional loan programs SBA has, this one is directly between SBA and the borrower. And the important things on this is, again, they're wanting you to use it on certain expenses. They call them working capital, operational types of expenses. And there's some other examples: rent, utilities, fixed payments that you have. The whole idea is that this loan will not replace your lost revenue, but what it will do is help you to at least keep afloat until things get back to normal. And remember, this is the first time it's ever been used for a pandemic, and the first time ever that SBA has a disaster declaration for the entire country. It's normally used for things like a tornado, a wildfire, an earthquake for recovery, very limited geographically speaking, and shorter term than what we're dealing with now. So they had to take that program and adapt it. Congress allowed SBA to do a lot of things right now with the pandemic that they were prohibited from doing in the past. In other words, the who's eligible, et cetera. So the interest rate on it for businesses is 3.75% for nonprofits, eligible nonprofits, private nonprofits. It's 2.75%, and it's a fixed term of 30 years. So your monthly payments are going to be very low. So qualified small businesses, just about all small businesses are eligible, even agricultural-based businesses that used to not be eligible for this program with SBA. Congress allows us to do that now. And as I said earlier, private nonprofits are also partaking of the program. If you can go to the next slide, please. So here's how you do the application. That SBA link at the top, the first bullet point, it's an actual, I think it's 5 or 6 screens. It's about, you could probably do the actual application in 15 minutes. It is that simple. The application is only used sort of as a pre-screen to see if you are eligible. And Jim brought up a good point. Maybe Jennifer did too. If you're not sure, apply. All they can do is say no. You might, spend a few minutes to find you're not eligible, but in most cases, most businesses and many nonprofits are eligible for these programs. So all that you've lost is your time, basically. And once you do apply, there's a 1-800 number there and an email address if you have questions for follow-up. Before I move on to the bottom of that slide, I do want to address the point that it's an online, very simple application. You've got a lot of yes/no questions to see if you're qualified, depending on what kind of business or nonprofit you are. Then it's going to be some simple text boxes, and the ones that are red to the left side of the text box just simply indicate these are required before you move to the next screen. What's important? Be very cautious that you don't have any typos, don't have any incorrect information before you hit submit. The very last screen says, look over all of this and make sure before you hit submit that everything's accurate. Here's why that's important. If you enter the wrong name of your company, in other words, you have a name that is not accurate on the Secretary of State's site or how you file with your taxes, if you don't enter in the correct bank name, your bank may have recently gone through a merger. That will cause an issue if you're not, using the most recent name. That doesn't happen often, but I know it has happened because I've talked to a lot of people. Your checking account number, your bank routing number, that's where a lot of those errors are. And if you put incorrect information, it can cost you weeks and weeks of delay, because there has been some fraud associated with that, and it takes them a long time to verify you're a legitimate business. Those are red flags, get sent up. So take your time, even though you can fill it out very quickly, be very cautious before you hit submit that it's correct. And if you do get turned down, you have up to 6 months to request what's called reconsideration. That is, they put you back in the queue and they look at it again, but you have to put it in writing. The best way to do that is to send an email to that email link right above there, disaster customer service at sba.gov. Send that to that email address requesting reconsideration. It'll have that. If you get denied, it'll tell you all this as well. But you've got up to 6 months to reapply, and you can also send it by fax. Do not mail it. Do not mail a request for reconsideration, because that is mail going all across the country to a big center that's dealing with all kinds of other information for these loans. And I'm not going to say it's going to get lost in the shuffle, but it's going to get delayed by quite a bit. So, and if you get denied a second time, you still have 30 days to request reconsideration. I've taken people through that process, so I know what the delays can be. So just be careful on that. Next slide. So they've got something new as of December of 2020 with the new bill passed.
It's called a targeted EIDL advance. And again, the word grant is very important. So if you look at the first bullet there about what you have to check the box for, if you're in a low income community, and there's a link SBA has just added to our website, it's basically a map. All you have to do is click on the link, put in your address, and it will tell you whether you're qualifying based on that. It's not zip code related. It's what they call the demographic census information, but that's where they get all that info. So if you type in your address, it'll either say, yes, geographically you're eligible, or no, you're not. And then you also have to have a drop of revenue, 30% or more. And I don't think that last bullet is too challenging for most, because 300 employees is still a pretty good sized small business. I've not talked to hardly anyone who's met that threshold of being above 300 employees. And that is basically if you were turned down or didn't get the full $10,000 back in the fall, or actually last summer before they ran out of the funds, Congress put more money in the kitty. So they're going to go with those folks who were in the queue and did not get a full $10,000. Let me give you an example of what happened. They said that if you have up to 10 employees, you could get $1,000 for every employee. Now Congress put enough money back in where they're looking at that and saying, can we give these businesses the full 10,000 and not 1,000 per employee up to 10 employees? So Congress put more money in there. SBA is going back, and those who didn't get the full 10 grand but got some funding back last summer, they're going with them first. If there's money left over, then they're going to look at others who applied but were turned down. So I know that sounds like a lot of process, but don't worry, because SBA has your information. If you applied and didn't get the full 10 grand or didn't get anything, they were going back through the database and one by one reaching out to people and saying, if you're interested, let us know, reapply, and we'll see if we can get you up to 10 grand. And that is a grant, a forgivable amount of money. Next slide.
Michael, can I ask a question here?
Sure.
I have a lot of clients who got the $1,000. So you're saying that the SBA, so they didn't have the 10 employees though. So the scenario was they had some employees that didn't meet the 10 requirement. Will they still be eligible for the $10,000 grant?
Well, what my understanding is, and there's a lot more detail on the website, sba.gov, under the EIDL page. Yes, they are going to look at that and see. So let's just say they got 4,000 instead of 10. SBA is looking at that to see if if they got enough funding. And Congress put, I believe, 15 billion or 20 billion, 25 billion back in December back into this program. They're going through those businesses one by one and funding them. So my understanding is you'll get up, that full 10 grand if you got some, but not all of the $10,000 in the past.
Awesome. Awesome. Thank you, Michael.
Sure. Okay. So basically they're going to ask this slide here tells you what they're going to ask for. A couple of more things than they did in the last round last summer. So they're going to ask for 2020 tax returns and then whatever you have for 2021 at this point. And then if you did go through that process, you probably recognize the last bullet, the IRS form, the 4506T. Basically what that is it's just a form where you say, yes, the SBA can verify what you send them through the IRS. And that's just a procedure that speeds up the process. Okay, next slide. So as I mentioned earlier, that second bullet in particular, be careful about the bank account information. I'm one that easily can transpose numbers or leave a number out. You got a long string of numbers and it's easy to do that. So make sure that everything is 100% correct. Maybe even get another set of eyeballs looking at the screen before you hit submit, just to make sure somebody else catches the mistake that you made but didn't notice. And then be aware that this time you cannot ask for reconsideration. If you make a mistake at this juncture, you can't go back and get a mulligan. So you need to make sure this time around that everything is 100% accurate. If it's not, it tells you there is a process to make those updates. So you actually go back in, and if you recall this, if you applied before, it's called the portal, the loan portal. You can go back in. Say your bank, maybe you switch banks, or maybe your bank bought another bank and the name changed, or maybe you submitted a different checking account then. Anything that has changed between then and now, make sure you get it updated before you submit it. If you do have questions, this is nice. They've got a special email address that is, before you apply, targeted advanced at sba.gov. So before you hit the submit button, you got a question, you can send it to SBA. And from what I'm hearing, they are responding very quickly to those questions. And then once that's approved, it's deposited in your checking account. Okay, next slide. So I think I saw a couple of questions popping up about the EIDL and the targeted EIDL before this point. So do we have some questions there, Jim?
Yeah, I definitely want to hit Chris here at the top. He said, if you got an EIDL loan the first time around, are you eligible to do another EIDL?
Chris, that is a great question, and I know you're probably not going to like the answer, but the answer is no. If you got an EIDL the first go around, you're not able to get a second one, unlike the PPP. However, if you got an EIDL the first go around, you can request more. Now, if you've already accepted the loan as was, say you asked for or wanted 85,000, you got 65,000. The best time to request additional funding would have been before you accepted the loan and signed the loan closing documents. I believe you may still be able to go back and request more, but it's a lot harder process. You cannot get a second EIDL disaster loan for the pandemic. However, I've had some people who got the disaster loan related to the pandemic, and then guess what? They have a natural disaster. There's been several of them in the state of Kentucky and of course across the country. If you saw the news about Houston and Texas in general a week and a half ago, they've got almost a statewide disaster declaration. That's a natural disaster related EIDL, not to be confused with the pandemic. I know that's probably confusing, but basically just think of the coronavirus, COVID-19 pandemic. That is a unique disaster declaration. So if you have it in the same time frame now, a natural disaster declared in your locale, that's a different request for what we call the traditional disaster loan program. But you can't get a second EIDL for the pandemic.
Right. Is the EIDL pass, is it a personal guarantee on that?
Yes, if it is $25,000 and above, I think you have to get a filing, a UCC filing, and it is a personal or business guarantee, depending on circumstances. The whole reason, though, for that 30-year term, that's like a home mortgage. Only the interest, the interest rate is very low. Like I said, 3.75% fixed for business, 2.75% nonprofit. So the whole design is to keep the monthly payments very low. And you can also pay it off early if you like at any time with no prepayment penalties. And that's often what happens on these types of loans. The monthly payments aren't too bad. Now, at the beginning, every dollar counts. But years later, after that disaster, when things are more back to normal and the business is healthier or the nonprofit is healthier, then they may decide to pay bigger chunks or pay off whatever the balance is all at once. And there's no penalty for that.
Right. I know I wanted to get to this one that I had sent to me, and I'd sent it to Jennifer, and I think this is a great scenario of how the EIDL was used by so many people, and a question specifically about it now that some time has passed with it. Jim wrote on Facebook that he took a $25K EIDL loan last year because he didn't want to get a government lien on a property. He now realizes that it's a general lien, like we just kind of covered a little bit, and not against any specific property. Can he go back and get another loan or increase the size of the original loan? And that's kind of maybe more of a Jennifer question where it's very specific.
I think Michael touched on that just a minute ago by saying he could request an additional funds, but it's unlikely that he'll receive the additional funds because it's already been sent out. Was I right by that? And that's what the information that I had found concerning that question when I was researching it over the weekend. That's also the scenario I had found, that it was very unlikely to get an increased amount approved. Michael, do you have anything to add to that?
That's in almost all cases accurate, Jennifer. It'd be sort of like saying, I wanted to take out a loan to buy a home. Let's just say it's $250,000. Then after you close on the loan and 3 months later you say, gosh, I wish I'd made it 300,000 and I could have put, that extra 50,000 into renovations. It's really hard to do that because, after the fact is so much more challenging. I'm not going to say it never happens, but you have to provide some very compelling reasons because they have to do what's called a loan modification and recalculate everything for you. So it's not, I wouldn't say it's, absolutely impossible, but would be very challenging. There's actually some links on the website under the EIDL program, and you can go on to that, and there's some phone numbers where you're making payments. I think one is out in either Oregon or Washington State. Another one, I believe, is in Texas. And there's a third site, and I forget where, but they've got phone numbers where you actually can talk to people and you can ask them that as well and see if there's a way to make that loan modification. But it won't be easy. I'll tell you that. You have to have some very good, excellent reasons that you can provide with a lot of documentation to get that increase.
Right. We got a question on Facebook for the targeted EIDL. Where would you apply for that?
Well, you don't. SBA will reach out to you. So what happens, you will already have been in the system, but didn't get, remember, this is the EIDL advance. Don't, please, I can't stress enough, there's the EIDL loan and then the EIDL advance grant. So we're talking about the grant. If you applied and didn't get the full $10,000, this targeted EIDL grant they're going through, that being SBA, is looking at all those who applied and didn't get the full 10,000. They're going to see if you're eligible based on geographic location and mention a lower income census tract. Then did you have at least a 30% drop in revenue? Those are the things they look at. And if you are eligible, then what will happen, SBA will send you an email that says you might be eligible. If you're interested, complete this stuff and go to this link to verify that you're in that geographic area, and then verify that your revenue dropped at least 30%. Those are the sorts of things. So you'll probably get an email, if you haven't already, you'll get an email from SBA saying, take a look, you might be eligible, and then you'll be asked to provide additional documentation to prove that. And then you'll get whatever that difference is between what you got and up to $10,000 maximum. And again, that's a grant. So, that's something you do not pay back.
Right. And basically you just want to apply first and get that ball rolling if you want to get to the targeted part of that. And thank you so much for people with your questions and likes on Facebook. I got one here on Zoom from Joe. I know that he's talking about the targeted EIDL in this case. Is it based off the address of the business or of a particular property? And he owns rental properties, and maybe in some of those targeted lower income areas, if he could prove that 30% drop, how do we know if he owns a portfolio of multiple addresses? Is it based on a particular address or the business address for the targeted EIDL?
Ooh, that's a really good question, one that Jennifer may want to weigh in on. I think it varies if you use just one business address And in his case, you've got properties. It depends on whether you set up, and many do, separate LLCs for those properties and use that address, or if you use one main address for the business. You know, there's a lot of nuance to that. That's probably something
Right.
Jennifer may want to jump in if she's got any insight.
I'm a little familiar with Joe's scenario just because his wife and I correspond a good bit just about different things that they're doing over in their business. He's set up as a C Corp business, Michael, and some of his businesses, some of the rentals are in their personal name. So of course that would be under a tax filing under their private home address. And I want to say the C Corp, and Joe, you might want to chime in here. I feel like you once upon a time told me the C Corp was also addressed to the personal address and not anywhere else. So I feel like it would definitely be off of his home address.
Okay.
Okay. Chris says he knows that he's supposed to invest the EIDL proceeds. And I think what he gets at is use the EIDL proceeds for business expenses. But if he's not using the money right now, can he put it in a money market or bond fund to offset the interest he's accruing on the loan while it sits? I.e., I think the general question here is, where do I put the money for the EIDL loan when I get it? And am I allowed to make money off of that money as it sits if I'm not immediately using it?
Oh, this is one of those questions sometimes I hope I don't hear the question, because the real thing about this program is it's supposed to be used by you or your business to help you recover. You're not supposed to use, and I know this isn't the example, but for instance, you're not supposed to use this to expand the business, i.e. another location or move it to a new location, a bigger, better one, that sort of thing. It's designed for fixed expenses and some variable expenses. You can use it for payroll and things like that. It's designed mostly to keep you alive as a business, because despite no revenue or a significant drop in revenue, expenses go on, and you can't always say to the bank, we're not going to pay for the next 6 months. You can't always say to your vendors, we owe you money, but come back in a year. So it's designed to pay those expenses ongoing with the expenses that are listed on the SBA site, and it gives lots of examples. I wouldn't say that I haven't heard of that happening, but that's not how the program's supposed to work. And the other thing, and you made a point about that earlier, don't use it to buy a Lamborghini or a boat or something like that. And I know this isn't that kind of example, but people are going to jail for a fraud, because understand you could get yourself into serious trouble if you're not using it the way it is supposed to be used. By the way, you should keep separate, I recommend it, and I think SBA does, separate banking accounts for these funds so that it's easy to track, because you got to show that it was used for these expenses, and you don't want to mix different program funds together, because that just muddies the water, and Jennifer can attest to how convoluted things can get.
So I'll tell you what I did, Michael, for my clients who didn't necessarily put the funds in a different account. We created a sub bank account in QuickBooks, and we named it whichever funding it was. So if it was the PPP funds or if it was the EIDL funds, and then, of course, me and my team are very in touch with what are approved expenses and what are not. So essentially, we just coded those expenses that could be used for those, the different funding. We coded those against that income or against the addition of funds, I should say, because it's not technically income. So that's how we accounted for it. I feel like Chris maybe didn't ask his question very clearly, because also have seen this many, many times of, as I stated before we joined the call, a lot of my businesses seen an increase last year, and that wasn't predicted in April when we first started this application for the EIDL and all that. So I feel like his question is kind of a twofold of, did he qualify? Because initially he's seen a drop in income, and then, come May, June, he all of a sudden his business is exploding, which is what I've seen with many of my clients is they did get the EIDL. They did have just a month, month and a half of things really slowed down for a minute and was a little scary. But then come May, June, things really took off and they've seen an increase in their revenue streams. So I feel like Chris's question probably would be something that would be better if an accountant would jump on his books with him and look at what expenses did he have during that time period that maybe could have been coded to EIDL rather than general revenue coming into his accounts. I feel like that would be a better question because, a lot of times the guys in the group or the ladies in the group, they will do their own books or they'll do their own stuff, and there's all too many times that I can jump on a call with them and be like, here's a good example is somebody will have a leased truck. And that leased truck is used 75% in the business and it's used 25% for their personal use. Well, they don't even realize that that's a business expense that they can take. They just have to account for the 25% use, right? So I feel like a lot of times guys are doing their own books and they don't really understand how different funds can be used to know. I feel like Chris maybe doesn't have a clear vision of, was there expenses that he paid from general revenue that could have been applied to the EIDL or the PPP loan and vice versa to account for the EIDL loan. So that way the money he's asking about investing in certain stocks or whatever, maybe that money legit can be invested there and he has enough expenses to account for the EIDL.
Yeah, and that's, again, kind of drives home the conversation we had right before this started about having experts help you through this process. It's having somebody that understands accounting and does this with clients is very important. It's like I've always said, do what you do best and outsource the rest. And
absolutely.
Accounting or marketing expertise, if you're not great at that, get somebody who is, because what you pay, in my opinion, is insignificant compared to the free time you have to make money and work on your business and grow your business. And there you got somebody there who can help you with all of that.
Jennifer, since we're kind of on that topic, how do you recommend that people are keeping track of how they're spending their EIDL? In an Excel sheet? Does it have to be, can you backtrack it maybe even? Like say I had an expense come up, but maybe I didn't put it in this month and now I want to backtrack it, or does it have to be like a transfer exactly that day? Like how do we report these things and show that we did use this loan money for specific expenses?
Absolutely. So as I stated, Jim, a lot of the times, the clients didn't open new banking accounts. And when we seen the money come in over on the QuickBooks side, we made a new sub account to that bank that said, this is EIDL funds or this is PPP funds. So then let's use PPP just because it's a little more straightforward about what can be charged to that. Right. So when we would run payroll expenses, when we were categorizing that expense, we would plug it in as it was a reduction to the PPP funds. When there was payroll taxes paid, that was something that could be paid with the PPP loan. So we would categorize it as it was part of the PPP funds. So I feel like that it doesn't need to be a transfer. It needs to be in that time period. We need to show that there was expenses that funds could have been used for to reduce the pot of EIDL funds or PPP funds, right?
Mm-hmm. Charles had a question, and you might know this, Michael. He received an email titled Invitation to Submit COVID-19 Targeted EIDL Advanced Application. Is that the email you're referring to for the targeted EIDL?
It sounds like it. It will come, if it's legitimate, it will come from sba.gov. Be careful, and I'm glad this came up, because there have been some bad actors out there that have even used federal logos, and it looks like it's a legitimate account, but if it does not have .gov behind, at the end of the email address, then be very careful. But that sounds exactly like what you would get in, I guess, if you submitted, an application and didn't get the full 10 grand, you know that as well. So you might get a sense that, yeah, this sounds right versus, gosh, I never applied. If you didn't apply at the beginning, SBA wouldn't have any way to reach you. So I'm not saying it's fraud, but there are cases of it.
Yeah. And Norm wanted to know if you've heard any grumblings about the EIDL loan specifically being forgiven, much like the PPP.
I've heard rumors, but right now those, I think, are all wishful thinking, because this program has been around for, as I said, decades and decades. It's always been a loan. It's been a low interest loan, and it's been a long-term loan, but it's always been a loan. So the one and only time there's been a grant involved was because of the pandemic. When Congress passed the original CARES Act back last March, and then that's that same program now with the targeted EIDL that's followed up. So again, that's why I've got to make myself real clear when I'm talking about EIDL, the loan portion versus the grant portion. And I don't think that the loan portion will ever convert to a grant or a forgivable loan. There's been no indication that some people in Congress have mentioned it, congressmen and senators and congresswomen, but I haven't heard any serious deliberation on it.
Yeah, and I would second that as well. I mean, like you said, the program's been around a long time. You did get that grant advance that was essentially free money, and the loan itself is a long-term loan, and it's been around for a long time. So I would see that being totally forgiven. But we are in unprecedented times, and like I said before, when in doubt, apply. So you definitely want to be on that track on the off chance that that Hail Mary did happen. I know, Michael, you did want to touch on a couple of unique situations right now with shuttered venue spaces. Do you want to hit that now?
Sure. We can go over those last few slides, and I'm happy to stay on if there's interest to answer other questions, if that's okay. But yeah, the Shuttered Venue Operators Grant, again, another grant program. It is not launched yet, but SBA is developing all of the guidelines for it. That's part of what came out of the December bill, the stimulus back on December 27th. So I don't know if is anyone out there in the audience who fits these parameters on those bullet points describing like the theatrical productions, operators of attractions. Most of this is tourism types of attractions. If so, it's a grant. And I think because everything's getting formulated now, I forget how much, but at least up to $10 million, maybe more on that. I don't have all the details because it isn't live yet. But when it goes live, which should be very soon, it'll have all that information on the site. There actually is some basic information and outline of the program on the Shuttered Venue Operators Grant. I think it's SVO grant or SVO, sba.gov/SVO. And it has all the parameters, but what they don't have yet is the funding available for you to apply. I think the last thing they're doing is tweaking the application form. So that's something, again, to consider. And then the next slide, I think, gets into these different programs. That's something you need to know. And by the way, you have to get up that previous slide. It's called sam.gov. That is where you register your business. And what they're saying is if you don't have a SAM registration, I forget what the acronym stands for, actually, but that's more on the contracting side with SBA. So basically, you have to get your business set up, and you just go to sam.gov, and it'll step you through that process because you'll have to get registered in that site in order for them to be able to verify that you're eligible and then deposit the funding. And again, it's a grant. So definitely worth the trouble if you think you might be eligible. Take a look at that. Okay, so the next slide kind of is a way to show a grid because there are a couple of things you need to be careful about. We were just talking about the SVO, the Shuttered Venue Operators Grant. If you receive that, you're not eligible for a PPP. If you recently got a PPP at anytime after January 2021, you can't apply for a shuttered venue operators grant. So there are a lot of people that are somewhat, in hesitation mode because they want to see if they could be eligible for the shuttered venue grant versus the Paycheck Protection Program forgivable loan. The reason for that is that the shuttered venue grant offers more funds for your organization. So sometimes you got to play that waiting game and figure out, do I go left or do I go right? The other thing is with in this grid shows that you are able to get a PPP and an EIDL loan. But what you cannot do is use those fundings from those programs for the same expense in the same time frame. And the best example of that is payroll. So let's say, and this has happened I had a conversation with a lot of folks back in the summer and fall. They got an EIDL loan, and then they got a PPP grant. And the payroll part, they thought, okay, I'll do 60 or 75% payroll, and then I'll use for the PPP to meet the eligibility requirements for forgiveness. And I will also use funds from the EIDL loan for payroll too. You can't use them in the same period. In other words, if you have, beginning of March to the end of March, do not commingle different funds for the same expenses. And Jennifer can talk a little bit about that. Now you can do it where, in one time period, you use PPP funds. When that runs out a few months later, you use EIDL funds for payroll. But you don't want to use them where it overlaps the same time frame, or you're going to get yourself in some trouble and you won't be, eligible for forgiveness for the PPP, which you don't want that to happen. So I know that's getting a little wonky, but that grid there tries to explain how the programs overlap and try and help you figure out, in some circumstances, one program's better than another, or you can get both programs, but just don't commingle the funds at the same time frame. I'm not sure I explained it that well, but there's a little more information on our website that has a lot of detail on all of these programs. Okay, next slide. So the last major thing is, if you did have an SBA loan at any time before, during, or after the pandemic was declared up until now, you've got debt relief. Basically, SBA will pay principal and interest on your loans. There are a lot of details that are on the website in regard to that. The lender, and in most cases, that's a bank or a credit union, but they should have been notified by SBA and should be aware of this. So principal and interest payments for anywhere from 90 to 180 days is paid by the government as a way to help you preserve cash for your business or your nonprofit. If you had a loan in one of those, what they call traditional, which is the 7A, 504 microloan programs, and you probably know about it if you had one of those loans, SBA would have notified the bank. Most likely you would have gotten a letter, and somebody else was paying your monthly payments for up to 6 months. It's basically a long story short on that. And I've got a link there, so you can go directly to that. And if you're not sure, you can contact wherever your loan is. Ask the lender about that. If you're not sure, ask them, because they should have been notified by SBA and would not be expecting you to mail in that monthly check to them, because it was taken care of by the government. Okay, next slide. So again, just a recap of all of these different programs, trying to clarify which one's a loan, which one's a grant, and then right in the middle, there's the EIDL loan, and then the EIDL advanced grant. So just a reminder on that, be careful right in the middle, or if you're not sure, you can go to our website for a lot more details, just to get clear in your mind. And then the next slide, I've got a couple of more useful websites. I will say, if you're not in the state of Kentucky, those last few websites, I've listed Kentucky. It's the same all across the country. It's under our resource partners. or if there's question, you can do sba.gov, just type that in and then / local assistance, the very first link at the top. All you got to do at that point is click onto that live link. And I think Jim's gonna, if anybody's interested, share the slides here. And you just click onto that, type in your zip code, and it'll tell you who it is close by you. The district office at the state level, it'll tell you the Small Business Development Center score, Women's Business Center contacts in your state, and lots of other information you'll find useful. Okay, so last slide here shows how to contact us. We're putting a lot of stuff out weekly and sometimes even more often than not on the website. A lot of stuff is on Twitter. I post something almost every single day on our Kentucky Twitter account, basically providing updates. I've got several today, tomorrow, in regard to what we've talked about, because again, there's so many things changing constantly right now. And as I said, there's a new stimulus package rolling through Congress right now. So, and a couple more links at the bottom, again, that I've referred to over and over about the coronavirus relief. That is all the programs, or you can drill down to PPP or SBO grant or the shuttered venue grant, or the one that I had earlier, COVID-19 disaster loan. That's the EIDL loan program that we mentioned numerous times today. So that's about it on just the highlights of the programs. I do want to again thank Jim and Jennifer for organizing the event, hosting it, and providing some great comments and some great questions from the folks out there in the audience too. Is there anything else in the way of questions we could field?
I don't have any questions right now, but I did post the contact information for you, Michael, and Jennifer.
It was 11 when they played us. That's bull, man. And
that'll be on Facebook as well. And basically, if you want to reach out to these people, I highly recommend it. This has been great, valuable information. Michael is always willing, I think, to help out for anybody in the small business realm with the SBA, and we definitely excited to have him on. Hopefully, maybe we'll have him in the future, and you all want to definitely keep an eye out on that shuttered venue operators grant if you're on the AMC train to the moon. Hashtag. So, but yes, there's a lot of great programs out there. I want you all to take advantage of them. The government is trying to give you money right now, so definitely be all about taking that free money when you can. As a reminder that the EIDL, you get advanced grant, the targeted as well if you're in specific for that, and then you get an awesome long-term loan, the PPP. Although it is a loan, the government wants it to be free for you if you qualify under those certain rules and use the money appropriately. So a lot of stuff out there. They're like bonus stimulus checks in a way, just for businesses. So definitely please take advantage of those. Anything you want to add, Jennifer?
No, I welcome anybody who has additional questions to email me or Facebook message me. I'm always available for the guys, girls, anybody in the group. I'm always available. I'm happy to help.
Yeah, thank you very much. And thank you for coming on again, Michael. And I think we're going to wrap it up here. I don't see any other questions, and everyone, I thank you so much for the likes. I saw several likes come across there and comments as well. So we're going to end it here. And if you have any further questions, definitely look for that contact information and reach out to these people. Right.
Thanks so much.
You guys.
Bye-bye.
Bye.
Have a good day.
You too.